Well, hello everybody. Welcome to the Forex market analysis session. If you guys are new, my name is Alexander Nikidin. I'm a professional trader and a developer of MPS software. In today's video, I want to show you the trading opportunity that I'm looking at. It is a unified gartley. It is very close to completion. I will explain you the identification rules of this pattern. I will explain you the trade execution rules and trade management rules. So having this information, you can go and test this pattern of history on demo trading, and maybe you will add this into your arsenal, into your trading arsenal. Okay, let us start. What is that unified gartley? It is a combination of a bat pattern and a gartley pattern. That's why it is called a unify. I simply united the two. I did that after I found in my market research that it has absolutely no need to split the patterns into two. In this point, I disagree with Scott Carney, who actually created the bat pattern, and who said that if the midpoint of the pattern is less than 618, it is typically 50 or 32, it is a bat, and if the midpoint is 618, it is a gartley. I disagree with that. And although those splitting the gartley and bat pattern is kind of standard in the industry nowadays, I made a step back to original rules and I united them together, and now I don't differentiate between the two. Okay, if you are interested in identification, so let me explain the structure of the pattern first. I will enable my drawing panel. So the pattern is standard W-type pattern for bearish and M-type pattern for bullish. So somewhere here I am to sell it, yes, somewhere here I am to buy it. So let me mark that arrow, let me mark this arrow. So now you know the structure of the pattern. If I put some labels here, these labels are called X to A to B to C to D. So D point is the reversal, the actual reversal point where that happens. These movements from X to A I call the legs of the pattern. One leg, second leg, third leg, leg number 4, fourth leg. And according to my rules, I don't say that according to somebody else's rules. According to my rules, based on my backtesting, these movements, each and every leg should be only one swing or one wave. See this? It is very important. According, and I repeat that, according to your swing identification algorithm. For example, my swing identification algorithm shows that the movement from here to here is straight. It is one swing, one wave of the market. But if you use your eyes identification, or maybe you are using some other swing identification, it may say that you have several swings here. 1, 2, 3, let's say 4 and 5 swings here. Yes, agree? So this part of identification kind of subjective, especially if you use eyes. And when I say subjective, it means that under some conditions you treat it as one swing, and under other conditions you treat it as two swings. This is what I call subjective. So it depends on your mood, it depends on your mindset. And very often, it happened to me earlier, very often after having a loss with this larger pattern, for example, and missing some smaller patterns because I was only looking for some major turns, I came to conclusions many times that, oh, if only I didn't trade that large one, that pattern, and if only I concentrated on those minor patterns I could have no loss at that large one, and I could have profited from those minor patterns. And this leads to me identifying swings different way, to taking those more noisy stuff, and then noise until you get lost in that. You go deeper and deeper into those nodes, and then you finally make a step back and you say, oh, what I'm doing. I need to look only at the major support resistance levels and the major swings and the major turns of the market. So you start that again and you trade it, and then you go to minor to less until you finally get lost in those swings again. So this happens over and over again to everybody who is swing trading, who is based on those swing identification. All the patterns are based on swing identification basically, and whatever pattern trader he faces this problem. So first of all, you should need to develop a swing identification algorithm that should tell you if the movement is one swing or two swings. Okay, that's it. Rule number one: have only one swing in each and every situation. Then let me show you. In my software that I have created to do the market research, why I call it the market research, because it can draw patterns on history with a blink of an eye. You only need to type -1 in settings, and you will have all the patterns that happened on history. You can also switch the algorithms. So using price extremes here, you have this picture. If you will use stochastic indicator, you see it skips some minor turns and you have no patterns here. If you will use RSI indicator, it draws the patterns differently. You see? If you will use commodity channel indicator, it draws the patterns using other algorithm. And if you will use Williams percentage range, it will draw the swings using some other range. So what I say, it's not that you should switch between these algorithms constantly and looking, okay, this shows me the pattern, so I should try that. It's not that. What I say is that if you use one swing identification algorithm, you should be consistent with this. So don't switch to other swing identifications. So my favorite one is this price extremes, but you can use whatever. You see that? So my favorite one is using price extremes. That's why it is always enabled. And of course we can switch the patterns to be displayed on and off. Let me refresh. Okay, it did the refresh. The indicator is refreshed every time the price changes. So whenever I type here, I need to wait until price changes to recalculate this stuff. You see? Wait until price change and they disappear. This is the feature of indicators in MetaTrader 4 platform. They are recalculating when the price is changing. Okay, let's go back to our discussion. First thing first, the identification rules. After you know the structure and you know that you only have one swing at each and every situation, yes, for each and every leg, you should remember these ratios. Let's go to indicators. Let us go here. The minimum midpoint, that is a B point, it should be 0.441, and the maximal B point should be 0.736. Okay, the extension is false. This means that point C should not extend past A, as it does in cipher patterns. You see the C point extends past A, and you have the extension. Okay, the minimum C point should be 382, and the maximal C point should be 1. It means that it can form a kind of double top. The C and A, they should coincide, but it should not exceed that. And the completion of the pattern is 786, and the invalidation is 113. So you can change them to have your own pattern, to have your custom pattern. It is not a standard one, it is mine. It is something that I use, and I don't say that that everybody is using that it is final truth to use this pattern only. Okay, it is something that I found working very good on history, and that is generating money for me in real-time trading. Well, hope you remember that. If you don't know what is the B point and the C point, the B point is this midpoint, it is this. So what is the retracement for that? You should stretch your fibs from X to A, you see, and the B point should be more than 44.1 and it should be less than 73 something, 73.6. And for the C point, yes, you stretch your fibs from here to here like this, and it should be more than 382 and it should be less than 1. So very simple. After you have this two measurements, you can stretch your fibs from X to A, and as I told you, 786 is always a completion. So the 786 level, you see this what is called alert. So if price goes higher than this level, I will be notified that the pattern completed. I made it 2 pips before that in order to be notified slightly earlier. Okay, that's it about the identification. Let's go to execution, how to execute trades according to this pattern. It is very important that you use the combination of identification, that you execution and trade management, because if you only use the identification and you execute trades according to your beliefs, according to your some strange strategies, it may not work. It was tested the way when the identification, execution and trade management go together, and only in this combination it shows positive expectancy. Some other combination, it may have positive expectancy or it may not have positive expectancy. It is very important. It is one of the popular ways of trading these kind of patterns, yes, is simply stretching this and placing a limit order here like this and a stop loss order somewhere here. Basically it is just above the X point, yes, just above the support. So somebody is using the 382 level, somebody is using 1 ATR level, somebody is using 10 pips above. It doesn't matter. So the limit order here and the stop loss here. In my testing I came to conclusion that this method has negative expectancy. So whenever you use this method, you will lose your money, and this is true for advanced pattern formations. So if you simply enter it with a limit order and you place your stop loss at 113 level, you will have a negative expectancy. This means you will lose money in the long run. Although the pattern works 60%, although the pattern is somewhere of 60% correct, so it means that you have a probability of 60% that price will reverse within this rectangle from here to here, from somewhere here, yes, and you will hit the 382. So you have 60% probability to hit 382 rather than hitting this 113. Some periods are 57, 58. It doesn't actually matter. The 3% is called a standard statistical error. So if your standard statistical error makes a change in your strategy, then your strategy is weak. You should find some other strategy to have a better percentage, or you should test more patterns. It is said that for one pair it is enough to test 100 patterns, but you should apply this 3% standard error, statistical error statistical deviation rules. But if you check 10,000 of patterns, then it becomes a bit different. Okay, first of all, until this leg completes, no pattern completes, yes? And this leg should be straight. If the algorithm will say this and then this, yes, it means that the C to D leg does not meet the criteria and it is not a straight leg. What I mean by the algorithm is this straight line, is this gray straight line. If it's still straight, then it is okay. If it fits this, yes, fits this, then it's not okay. You should keep this in mind. Let's go next. It is the completion. The second stuff that you need to look at is the execution, and I execute my patterns using the candlestick formations. So what are my favorite candlestick formations? They are called powerful bearish candle and powerful bullish candle. What is the powerful bearish candle? So suppose this is the range between the high and low, and it has 100%. So 0 is low, 100% is high. And if you will look at the candle close, if it closes at the bottom 20%, it is of the range, it is called powerful bearish candle. And if it closes in the up 20%, it is a powerful bullish candle. That's it. And it doesn't matter where is the open. If the open is here, you may have a trending day. You see, it is called a trending day pattern, a continuation pattern if you had that previous trend. But if the previous trend was this, yes, this powerful bearish close may be a dark cloud cover, it may be one bar reversal, it may be an engulfing pattern or whatever, because it is a powerful bearish candle. Especially when the open is here, it is the famous inverted hammer pattern or shooting star, yes. Okay, and the same with that powerful bullish candle. You see, if it is found in the trend and it supports an uptrend, then it is a continuation pattern. If it is found at the bottom, somewhere near support level, then it is a reversal pattern. So it depends on the situation. As I told you, I treat that range as 100% from 0 to 100. So below 20 is the powerful bearish close, above 80 is the powerful bullish close. And I coded special indicator that does this stuff for me. I only need to look at this line to find out if I had a powerful bearish close or I have a powerful bullish close. Okay, hope you understood that. You can also use your eyes, or you can also use your calculations to find a powerful bearish close or a bullish close. Okay, it should happen somewhere within this zone. If it is one pip away of that zone, it completed the pattern, and then the pattern appears here, then don't enter. Only enter if it is in this blue rectangle. So the powerful bearish close should be in this rectangle only. And then execute it at market. What you need to do when you execute that, for example, let me draw those candles, candle flow. Here's the execution candle. Typically they appear here, somewhere near this resistance level. Sometimes they appear earlier, sometimes just at that, sometimes past that. And there is a 53% of reversals happen earlier, 30% reversals happen somewhere at this resistance, and only 16% of reversals happen past that X point. They happen closer to this stop loss. And You may say, you know what, Alex, why should I only trade those that happen earlier? If you say that 53% of all reversals happen there, why shouldn't I trade this? Okay, let's do it this way. Let's first split this into thirds. Yes? Split this reversal zone into thirds. Sorry if I'm not very good in drawing. Hey, come on. Maybe this should go higher. Like this, and this should go lower. Like this. Into thirds. If it is in the first third of a zone, then we have 53% of 53% probability of all those reversals to happen there. And if it is in the second, then we have 30% of reversals will happen here. And if it is in upside, we have only 17%. 53, 17. Maybe I need to tap it. Oh. 53% of all reversals. Whatever reversal happens, you have a 53% of probability that it will. It is very important. The 30% happened here, and 17%. This is empirical data. It is based on historical performance, and it is based on thousands of patterns examined. Okay. Out of all reversals, if you calculate the reversals as 100, I don't say that 53% of trades reversal here, 30% of trades. No, 53% of reversal. Out of all reversals, the majority of them are concentrated within this zone. Then 30% of them concentrated here, and the smaller portion concentrates here. But you should keep in mind the target adjustment. For example, here, if you execute it here on this candle, somewhere here, yes, like this, you had that powerful bearish close. So what is your target? Your target is 44 and 4, and your stop loss is what? Let's go, 47.3. 44 versus 47. Although you will have the majority of trades of this kind, your target, your first target, will be smaller than your stop loss. Should keep this in mind. For example, let's go further. We entered the second zone somewhere here. And although we have less winners here, less winners actually reverse here than here, yes, we have less probability of reversal. The deeper the price goes into the zone, the smaller is the probability of a reversal, because less reversals happened here, and you execute it here. But look at what happens. Now your target is 50 versus 32. Although you have less reversals, you have better risk to reward. And suppose the price goes higher, like this, and like this. You find the execution somewhere here. You have 57 versus 15. You see that? And this levels everything up. It is levels. Although you have the majority of traders here, you have the worst risk to reward. The price goes deeper and your risk to reward becomes better, but the probability decreases. The deeper it goes, the less is the probability of the reversal, but the greater is your risk to reward. And on average it levels up. So you can't simply say it, let me always trade it here, and let me put the stop loss here, and I don't want to go to that upside movement, or something like this. It will be invalidated if the reversal does not happen within this zone. The pattern will be invalidated. So you will simply miss the powerful opportunities that are above. greater risk to reward, but less probability. Okay, keep this in mind. You can only trade that zone, of course. It's up to you. You can only trade that zone, but you will have larger losses than winners. Your winners will be actually less than your losses. Or you can trade the first and the second zone. Only trade it when the reversal signal appears somewhere in these two zones, and don't trade it when it appears here. It is up to you. I trade this zone as a whole, and out of 100 trades, 60 trades reverse somewhere within this zone. So if we have 60 trades, 60 reversals, so 53% out of those 60 happen here, 30% out of those 60 happen here, and 17% of those 60 happen here. Let us calculate it using this. So 60 reversals out of 100. If I multiply 0.53, I will find the number, okay, 32 trades. So let me calculate the absolute number of 32 trades. 53% of reversals. 32 trades. Okay. Here 30%, yes. Let's go 60 multiplied by 0.3, 30%. It is 18 trades. And what is left will be 30% of reversals, 18 trades. And what is left is this. This is the second zone. 32 plus 18, it equals 40, 50, 10 trades. 10 trades left. We can also calculate it this way. If you go, 60 multiplied by 0.17, it should be somewhere 10 trades. Yes, 10 trades. Go to label properties, 17% of reversals. It is 10 trades total. Okay, now we have the probabilities based on zones. So out of all trades that you will take, 32% of all trades will give you a reversal here. 18% of trades will give you a reversal here, and 10 trades will give you a reversal here. And mind the pattern here. You have 32. In the next zone you have twice less, and in the next zone you have almost twice less as well. So you see this, 32 twice less, 18, 16 would be twice less. It is almost twice less, and 10 is almost twice less. So I mean that we have some ratio here. Let me delete that 18 by 32. Maybe we have some Fibonacci related ratio here. 0.56, and let me delete this, divide it this way, 35 divided 18, it will be 1.77786, 1.786, almost 1.618. Well, no, not the sacred Fibonacci ratio. Okay, so as I told you guys, for example, if you have a reversal here, and you placed your trade, and we are talking about the target management right now. The execution part is explained. If you guys have a reversal here at this candle, for example, yes, you have it. Initially your take profit is this and your stop loss is that. Let me draw some horizontal line to mark that entry, and let it be, I don't know what color, and this. Okay, this is your entry at this horizontal line, and this is your take profit, 35.37. Yes, if price goes deep, you need to restretch your fibs. Now it becomes 35.40. If it goes deeper, you need to restretch your fibs, 35.42. If it goes deeper, you need to restretch your fibs, 35.46. Then it goes deeper, 51, and it goes deeper, 35.54. This is called target adjustment, and what it does, this target adjustment, it fits the Fibonacci to price action, and it leads to your take profit becoming less and less. 28 right now. Initially it was set to something 50, and in case price goes here, you will have it 29. You see, this is called a target adjustment. Your take profit becomes smaller and smaller and smaller if you entered here in the first zone, and in case price didn't reverse sharply, it goes deeper into zone instead of reversal. This is called a target adjustment. Without that target adjustment, the probabilities are not that that I told you. You will never have the 60% of hitting the 382. Somewhere within of this range, the statistic says that somewhere within this range, within this blue rectangle, you will have a reversal that gives you 382 retracement. So it may happen here, so the reversal will look this way, that gives you a 382 retracement. It may happen here, yes, somewhere within this zone, and you never know where exactly this happened. That's why you need to wait until this powerful bearish candle, until some part of that reversal starts, and only when it starts, odds are in your favor that this is that reversal that is most likely to happen. That is 60%, that has a 60% probability to happen. So do not execute it in limit order fashion. To my mind, it is kind of stupid, and I've been doing that stupid stuff for 5 years in the beginning of my trading career. Simply listening to some other guys who told me that it should be done, and I never did my own research. I never did my market analysis, mostly because I was lazy to draw these patterns manually. But then I finally came to conclusion that it will not work that way. I need to do something. I either need to do my own backtest. I need to check all the words that I heard about those patterns myself, and to finally get the confidence, because the guys say that it will rise and you will generate money, but my own account says that it's only falling, and I lose money from 1 year to another year to another year, simply following blindly your rules. And I decided to check it myself. I started doing my backtesting again and again and again, and I found very monotonous, and I found it very time consuming, because if you stretch all that fib to check one leg, second leg, third leg, I came that realization of that subjectivity of leg identification, and it all resulted, it was all the preparation to creating that software that I have right now, and that simply draws the patterns for me. I only need to go to settings, and I only need to type -1 here, and MPS Pro will draw all the patterns on the history of the chart according to the algorithm, according to the type of patterns that I set in my settings. So this control panel helps me to switch it fast and not to go into settings all the time. Let's go this way. You see it? And we have all these patterns, and I simply calculate if it works or not, and what needs to be, how the pattern should look like in order to work, and how it should not look like. For example, as I told you, the C to D leg should be one swing. Yes, we had one swing, second swing, third swing, so not executing here. This is one of those rules. So this one swing worked perfectly. This one swing worked perfectly, but it didn't complete. Yes, so something like this swing 1 2 3 4 5 6, before it completed we had 7 swings, so do not enter that, you would not have this loss. So I coded the software special way, so not only you have those patterns that won, but you also have those patterns that lose. And not only you have those patterns that complete, but also you have those patterns that don't complete, that didn't complete. So you see that? One swing, winner. Okay, this one swing is a loss, it happens. Not all of them are winners. This one swing was a loss. This several swing was a winner, so it is kind of filtered according to my rules, but it is still on the chart. So this several swings, the C to D is several swings, was also a winner. Simply do your own market research and calculate it yourself. Don't believe only the words of some guys from YouTube channels that tell you that it should work. And finally, nowadays we have it this way. Let me disable that. Only 500 bars. I want 500 bars to be analyzed, because 500 bars is actually this active window that I have in front of my eyes. So if I switch that off, it will be calculated, and if I switch that off, it prevents the constant recalculation. I don't want it constantly recalculated. I don't need my indicator consume my RAM. I want to use my computer for some other purposes, for example to record this video. It also the recording software also requires some memory, requires some power of my computer. That's why. Okay, continue with the trade management. The second rule of trade management, the first one was this target adjustment. So you adjust your targets, you fit these targets to price section, yes, and you stretch it, stretch and stretch and stretch, and one of two things will happen. Either you hit your stop loss like this, boom, or you will finally get that take profit. One of two things. The target adjustment is done automatically by Pattern Trade Assistant. It is this special expert advisor that does the trade execution, and it does the target adjustment, trade management. Okay, I don't need to sit in front of that computer, and every MPS customer gets this Pattern Trade Assistant. Every. Okay, absolutely for free. The Pattern Trade Assistant is given for free to my MPS customers. So you can go to settings, you can go to choose your position size. I'm using fixed position size 0.02, but you can use fixed money position size. For example, let's say $100 on each and every trade, regardless of the stop loss size, or for example percentage, 1% on each and every trade, regardless of the stop loss size, or Kelly percentage. The Kelly percentage is actually the percent you are allowed to risk according to your strategy performance. But you will need to use a Kelly percentage. You will need to set your risk to reward. You will need to accuracy, and you will need to use the multiplier to get that Kelly percentage correctly. You will need to know the performance of your strategy. Okay, and the second trade management is the break even. So When I enter the trade, I open two positions. One of them is aiming 382, the second one is aiming 618. So when the first position is closed and I have the 382, what the pattern trader system does and what actually should be done according to the rules, it moves the stop loss from here to my entry. And in worst case scenario, if price reverses back from 382, yes, I don't have the stop loss, I have 0. So it can happen either two of that, either price reverses or it continues to the 618. In case of 618, I have the second target, so this way I let my profits run, and in case of moving to the downside, moving back, I have cutting my losses, so I have 0. So this is the second rule for trade management. Also done automatically by pattern trader system. How it works, you simply stretch your fibs from here to whatever candle you are looking at, and then you place your stop loss horizontal line, use that horizontal line, and then you use the hotkeys. You type an M to execute market order, you type L on your keyboard to execute limit order, and it will be placed. The market order, of course, will be executed at the market price, and the limit order will be executed at the price where the zero line of your Fibonacci is currently placed. So, for example, if you wish this to be a limit order this way, yes, and you want to execute as soon as it touches this reversal zone, simply type L, and you will have, sorry guys, I just let me delete this line. So we had some additional line that happened earlier. For example, if you want to execute a limit order somewhere here, simply type L, and you will have that two trades set, 32618 plus one offset. The offset is one spread, so to get the execution correct, and the stop loss is placed according to the horizontal line, which is this 113 level that I placed at. So you see, it is very, very convenient, and you set your money management in this pattern trader system. If you set it to 1%, it will always calculate the distance between your entry and your potential stop loss, and it will set that to 1% to fixed money, or it will simply open your fixed position. That is always the same. Very, very convenient to have that pattern trader system. Well, that's it about how I trade the pattern. That's it about how I identify it, how I manage, how I execute that. That's it about some about the statistics and about the rules that I use. If you guys are interested, you can follow the link in description, and it will lead to my website. You will get the information about the software, and what is most important, you can get the absolutely free education on how to identify these patterns. Simply click on this Learn the Patterns tab, go to whatever pattern, and you will have these identification rules, very much explained in details, in very details, execution rules, and trade management rules. You can also watch my collection of free videos. I add here some videos that I find to be most important in this pattern identification, trading, pattern execution, and trade management. I also add some psychology videos here as well. So they are basically the same videos from my YouTube channel, but I try to add here the most important one, the ones that I think to be the most important videos. Okay, now that's it. Hope you like this video, so give me a thumbs up, share this video on social media. Until then, good luck and good trading. Hope to see you soon.